Hello, everyone. Today is Thursday. It's a crisp, almost chilly fall day here in Wisconsin. I'm sure Michigan is close to being the same. We're kind of right around freezing temperatures, but the weekend should bring high 50s, so I'm kind of excited, and that's when I get to do my yard work before the snow flies. One thing I wanted to show you. This is my backyard. This is what fall in Wisconsin looks like. And we bought this tree when my daughter was very young, and it was maybe 4 or 5 feet tall. So in the 16 or so years, it has grown to be almost like the perfect tree. And when we bought it, the only condition my wife had was that in the fall it turns red. So sure enough, that's the tree that we got. I can't thank you guys enough for the app, for testing it. I believe most of you that have requested have gotten in. If you have not, either IM me, email me, reach out to me one way or the other. I am finding that there are certain emails that get rejected. So if you have a Gmail address, those seem to work the best. This is the screen of the app that I'm thinking about changing. For one, I need to add headers because it lists the 5-minute high and the low. And those of you or people outside of our group aren't going to understand that 5-minute range. Another exciting thing that I've started is this. This is actually looks like an iPhone 11. So I've started coding for the iPhone. Hopefully soon I can get that into finish developing it and get that into a testing phase as well. Hopefully by the end of the year, fingers crossed. The messages in this video are for informational purposes only and do not constitute investment advice. While every effort has been made to provide accurate information, we cannot guarantee the completeness or the timeliness of the information contained in the upcoming videos. This video is for informational purposes only, and our intention is to educate you a little bit. So lastly, my project that I've been working on, and with Dennis's help, have started filling out this ETF sheet. And here are the different indices, commodities, that sort of thing. I've tried to list the indices, the futures, and then we have the ETFs. We have single ETFs, leveraged ETFs, which include 2 times the movement and 3 times the movement. Now, if you're into these leverage ETFs, be aware of 2 things. One, they're quite volatile. And 2, if you get to those that, other than these couple things, and boil and cold and gush and drip, some of these might not have a lot of volume. So if you get into them, it may be hard to get out. So keep that in mind as well. I'm gonna finish this up with Dennis. I don't know about today, maybe tomorrow, but soon. And once I do, I will publish it in the Follow the Money group. I don't really understand Google Docs. Otherwise, I would just share you the spreadsheet with you. I think you can do that, but like I said, I'm somewhat new to Google Docs. With that said, I'll turn it over to Dennis.
Okay, thanks, Brian. Okay, well, we're going to continue the conversation on doubles and see what we think here. Okay, on the singles, I have most of them listed up here under my alpha group, and you can see the Qs here,
Which have been on fire, basically.
Yes, they've been unbelievable securing the S&P 500. And interesting to note, it just keeps moving up, but is it overvalued? Absolutely. I put a new indicator up here called money flow, and you can see it's red. I don't know if you see that, Brian.
Yeah, I do.
and we're at 92.7. Maybe a little bit higher, but I've seen as high as 96 before they usually crack.
Well, and speaking of the cues, let's see if Alan can rework his magic on Google. If you guys are familiar, last Friday, I think, was his Google trade where he, and I don't even remember the numbers, but made quite a bit on Google. And Google is quite extended as well. It had quite a move today. So we'll see if that drops. And if it drops 75 to 100 points, you may turn $50 into $500, $1,000.
So let's go on to the PSQ. There's probably no indication we should be short the Qs right now. And that's right at the bottom of my list, number 221. And you can go here. And on a daily chart, there's absolutely no reason to look at it. I mean, it is way below zero.
And this is short the Qs, so it's basically the inverse.
Right. Maybe we can buy it on a 5-minute chart, Brian. Not quite.
Yeah.
So, there's no way you can short the Qs. Sorry. And then we can look at DIA, the Dow Jones Industrial Average. That's a single leverage.
And what are those, the 30 stocks in the Dow Jones?
Yeah, there's only 36, 30. Yeah. And that's actually down today, which is interesting. And here's your Dow Jones Industrial Average. And you're getting up to the peak. You're at 78 on your money flow. Real no reason to sell it at this point. I can't look at a chart and tell you should sell it. You need more of a clue, like, the 4-day crossing over this 13-day moving average. Something.
Right, exactly. Yeah.
There's no point in predicting what will happen. And then you got DOG, D-O-G, that is the 1X. We won't even bother showing it. There's no point. And then you got IWM. That is your strongest sector. And I think I got IWM in here. I know it's there. It is up 0.1%. Very little. Now this one is definitely a possible short. And why do you think that might be?
Oh, look at that little red dot way up there.
Yeah, but what else do you see? I put the Bollinger Bands up there.
Oh, is that what that little blue line
Yeah,
is?
the little blue line, that's the Bollinger Band.
That were kind
Generally,
of
when you get above a Bollinger Band, it's done.
Yeah, the one that were kind of extended above.
Yep.
4.
I'm going to
So there's a clue. That's all I can tell you.
Are you gonna be back by 5?
And then we go on to the S&P, don't we?
Yep.
SPY. Where are you, Mr. SPY?
189.
There you go. Let's look at the daily chart on that one. There's no point. It's at 90 on the money flow. Wow. And people say, why aren't you in the market? Well, I don't know what to tell you.
Hurts to be a bear.
Yep. And the other one look at is TLT on a single play.
Which are interest rates?
Yes, government bonds, the 20-year government bond. And it's interesting, you can draw here and you can see a general trend here. I think yields are going up and government bonds are going down. So if you did this, you can see generally going down, can't you?
Right. Yeah.
And your 4 days crossed your 13.
And I was going to say they talked about tapering yesterday at the Fed.
Yep.
So, and I think I don't know if it was today, yesterday, sometime this week, heard about CNBC thinking that rates will hit or come up to 2.0, maybe 1.9, 2.0 by the end of the year.
Yes, I mostly definitely would consider, shortening the government bonds, but you can see money flow going out of here. You can see that too. I kind of like that indicator.
Right. Yeah, and as money flows out of bonds, that basically means that rates are going up. It's the difference between the price of the bond and what the bond, the face value of the bond. So
Correct.
so that's a little bit hard to understand. It took me a while to kind of get that relationship between rates and the value of the bond.
So, you've got, a 60-minute chart, same thing is kind of bearish. I personally wouldn't be in it. Anytime you see the government bonds go up, then there's an opportunity to sell more or short. Because I do, like you think, there's a good chance it could be going up to 2%.
Right.
But don't know. So one other interesting thing I found out again today is look at the dollar again. We're in the same play with it. If you look at DXY, where are you? There you are. We're at 94.33. We crossed that above again.
Wow.
I think there's a good chance that goes to 95. It doesn't move a lot, but when the dollar is up, let it rip.
Right.
You can see this has kind of been going up. You can take your trend line and draw.
Yeah, we're above that.
Okay. I think this is going higher. Okay. And so that ties, even though gold was up today, kind of tricky, up 29 points. I think gold's going down again. Okay. And you can do the same thing. Just draw your trend lines. It's not that hard.
Right, exactly.
And you can see from here to here on a daily chart going down. Okay. And your volume's also telling you it's going down. And your MACD is already crossed. And you're below my 13-day moving average. It's like there's signs all over the place.
Right.
So I think it's the same old trade here for a while.
Yeah, I would agree.
I'm glad you agree.
You know what I found was interesting on the prior chart, the dollar. There is no, yeah, if you bring up the daily.
What did you see on there?
I saw no money flow and basically that.
Oh, that is my fault. It's just because that is an index.
Right.
You exactly. Go to UUP.
Right. Exactly.
Right here.
You can't buy the index, and that's why there's no money flowing into it, because you can't. Just like you cannot. Is it the SPX you can't buy?
Right.
Right. So yeah, the SPX as well. You won't get money flowing in and out of it because you can't buy the index. You can buy.
So you can buy UUP, which is long the dollar. You can see that.
Do I have that on my spreadsheet? Let me go check.
I don't know.
Let's see here. How do I get it?
It's just the 1X, mind you.
I'll have to make a note of that and check my spreadsheet. UUP.
And UDN is the short side of that.
UDN. Long, short, dollar. Okay.
Okay, so I see a trend going there. 1, 2, 3, 4, 5, 6 days. If you see the trend line there.
Yeah, that dollar go up. Yeah. Or 5 days in the parabolic SAR. being bullish.
Yep, that's another clue.
Yeah. Yeah,
So like you
definitely.
say, it's like playing detective with these individual ETFs. You're playing detective. And for, there's signs all over the place.
Yeah. Yeah, you just got to know how to read them.
And then you see you're above your 13-day moving average there. And MACD is positive. Volume is increasing a little bit.
Yeah.
So we're getting in the bottom right now at this point. Okay.
Cool.
So that's pretty much in good education about where we're at. As far as the equity side, there's really no signs to say call uncle, to go short, other than we saw a few clues on IWM.
Right. Yeah.
But it's not all in. Don't know. It's interesting, GDX, you take a look at this. Remember that was up this morning. Gold was up 29 points.
Yeah. It sold off.
Look at it. It's down today.
Oh, wow.
And the charts are all red.
Yeah.
It was a fake out today.
Every time I hear that,
important.
I was gonna say every time I hear that, I hear or I picture from Star Wars that one of those aliens saying it's a trap.
Look at this. Here's another trend line. Draw your trend lines. It's just so important. I don't want to make any predictions here, but there you go. Now, if it crosses that line, you get a different game coming in.
Right. Yeah.
I see a trend line of gold going down. Let's look at GLD in itself. IAU is what I like to use. It's cheaper price. Don't ask me why, but same thing. And you'll see the same thing. Take your drawing tools, draw your trend line. There you go. I rest my case.
Yeah. Right.
Okay.
Sound good.
That's pretty much all I have today. I'm done. If yields keep climbing up, it will take a toll on our equity markets.
Okay. Well, sounds good. I hate to cut it short. I could sit here and talk hours.
Me too.
But yeah, this is definitely valuable. And like I said, I think in addition to this, ETFs that mirror the different sectors of the market will help as well. Will kind of guide you along.
Sounds good.
Okay. Thank you, Dennis.
All right. We'll see you then. Bye.
Bye, everyone. So with that said, I have my partner, Dennis Prost, who's a CFP and RF registered fiduciary, which basically means that he needs to look out for your interests. He's legally bound to look out for your financial interest. So with that said, I think I'm going to turn it over to Dennis and see what Dennis has to say.
You might want to mention our disclosures first.
Oh, that's right.